that you have a government that is that much involved in the equity markets, that much involved in the gold and silver markets or the oil markets or any market around the world. If the governments are in there manipulating on our behalf with our tax dollars, thinking they're doing the best things for the citizens of their country, then these guys need to be outvoted, and we need to reset. We need to bring new people into these governments with new thought processes and rewrite the way things happen around the world, not just in the United States, but everywhere, because the way these governments are acting is completely contrary to the authority, I believe anyways, that the authority that the electorate has given them.
Hi, and welcome to the X22 Report Spotlight. Today we have a returning guest, Keith Neumeyer. Keith has worked in the investment community since 1984. He began his career at a number of Canadian national brokerage firms. Keith moved on to work with several publicly traded companies in the resource and high technology sector. Keith founded First Majestic Silver, and he is the chairman of First Mining Finance. And I am very happy to have Keith back on the X22 Report Spotlight. Keith, welcome back to the Spotlight.
Yeah, it's good to be back. Thanks.
Hey, thanks for being back here. And I wanted to just start off with the Fed and them raising rates. And over the last 3 years, as the Fed continually raised the rates, I think they had a total of like 9 hikes or something. We saw gold inch up, silver inch up a little bit, and people were surprised by this. And then all of a sudden we had Trump. He was elected and he started to, go after the Fed, where he was saying the Fed is the enemy. He's the biggest threat, and they've gone crazy. Do you think there's going to be a full-blown crisis between the Treasury, Trump, and the Fed moving forward?
Well, it's a good question. I'm not sure if there's anyone powerful enough to fight the Fed or fight the Treasury. These are institutions that have been in place in the United States for, generations and, since 1913. It's a long time, over 100 years. And Trump might not like it, but I'm not sure, he's powerful enough or anyone's quite powerful enough to actually change the way things work. But, it's making interesting headlines for sure, and it's moving markets. It'll be interesting to see, where this all goes. But I think there's a flaw in the argument to begin with, because, gold can go up in a rising interest rate environment. So, and it's happened, if you go back to 2011, 2012, we had 5.5% interest rates and gold was, on all-time highs. And then today we're at, 2.25%. So, it's really not the headline interest rate you're looking at. It's really the real interest rate, where the inflation numbers are, where the interest rates are. If you look at, assuming, inflation's at 2% and headline interest rates are 2.25%, you really only got a 0.25 point interest rate, real interest rate. And that's what's supporting gold. If we could actually see the US dollar turn around as well and stop its bull run, which has been going on for the last couple of years, you would have 3 very strong, fundamental, drivers to the, moving gold higher. But in the meantime, it's been supported quite nicely over the last couple of quarters. And I think the market is waking up to the fact that, the Fed may not be increasing interest rates any longer. And, I think that's, starting to become a more popular trade.
You mentioned that you don't think that the Fed is going to be raising interest rates, and Kaplan was out there, and he's saying that they won't raise rates for probably 6 months, maybe in the middle of 2019 now. And Powell was just out there saying that he has some flexibility now, looking at the markets and things like that. You think they're doing this because they're realizing that the stock market, the economy is falling apart as they're raising rates?
Well, the Fed is always behind the ball. They're never at the beginning, the head of the curve. They're always behind the curve. So, the Fed has said many times they're data dependent, and they are very much data dependent. So they have to wait for the data to come out, which is always late, late by a month or late by a quarter or late by multiple quarters. So they're always kind of, making these changes, late in the game. There's other people out there that I listen to that are much more forward thinking. I've been of the view for the last 6 months that the rates are going to start to go back to, 0%. And I know there's a lot of very well respected fund managers out there calling for 4 to 5% interest rates, which, quite frankly, I don't understand why they would be thinking such things. But, look, we're all welcome to our own opinions, and then the opinions, what drives the market. That's what creates the volatility. That's why one day we're up 500 points and next day we're down 500 points, because it's differing opinions on what's going on in the marketplace. My opinion is that US dollar is going lower, interest rates are going lower, and metals are going higher.
Do you think if the interest rates drop, because they were raising the interest rates to fight inflation, if they drop the interest rates, do you think we're going to see inflation then?
Absolutely. Yeah, no, I think it's already.
Is this hyperinflation or just everyday inflation?
It's really hard to say what kind of inflation we're going to see. Like I was around, I remember, 1983, 1984, when we started seeing interest rates at, 17, 18%, and it was a pretty crazy environment. And, inflation rates, I forget what they are at the time or were at the time, but they were double digit, inflation rates. And it was just, very, very, strange environment to be in. And then we saw the deflation, into the mid 90s and then the Nasdaq bubble in, 2000. So, I've seen a lot of cycles out there, and none of them are exactly the same. I doubt whether this cycle is going to look like 2008. That was a very, unusual phenomenon, a bunch of things occurring at the same time. I think that the cycle we're going to go, or we actually have entered, is looking very similar to me as 2000, 2001. Where we saw, the Nasdaq reach all-time highs. And then over the next 3 years, from 2000 to 2003, the Nasdaq shed 80% of its value. And that was the beginning of the 10-year bull market in metals. Gold went from 250 to 1900, and, silver went from 5 to 50. And the mining shares, we all know what happened to them. And it was a pretty exciting time for the miners. But, I think we're in inning 1 or inning 2 of that next phase.
Now, you mentioned that you've been through all these different cycles, and during this period of time, you decided to start different companies. I mean, the first one was a copper business, which became a $10 billion company. The second one you launched was right when silver bottomed in the early 2000s. First, Majestic Silver. We know that in 2016, the Swiss Central Bank was buying shares hand over fist because the price went from $4 to $24 in 8 months. I know this is your baby, your mothership. It's also been termed the purest silver miner. What does that mean exactly?
Well, it's based on revenue. So, there's a lot of companies out there that, call themselves silver companies, and many of them are great companies. I'm not taking anything away from the quality of those companies. Pan American, Coeur d'Alene, Hecla, these are all, very good companies and well-run companies. But, when it comes down to what is the revenue from from silver, a company like Hecla, for example, they're around 30% or 25%, silver. And Pan American's around 45% silver. And I think Coeur's around the same as well. We're in the 65 to 70 range, which puts us in a pretty unique category, of the majors. Now, of course, there's small little miners out there. I'm not going to name names, but, there's lots of small guys that, have one mine that are producing, 90% silver, but, they might only be producing, 400,000 or 500,000 ounces of silver a year. So they don't even show up, in really kind of any analysis. But when you look at the big guys, ourselves and the other companies I mentioned, First Majestic is in fact the purest silver company in the world. So, it's important to me because of my thesis on silver. So I've always, when we've done acquisitions, I've always tried to focus the acquisitions on silver as much as possible, despite how difficult it is, because, silver projects are quite hard to find and they're quite rare animals. But I think we've done a pretty good job of acquiring, darn good silver assets, and we'll continue to do that over time with our eye always on our purity.
Now, with silver, I mean, there are many investors out there, they're waiting for another bull market in silver. I mean, it's been 8 years, maybe a little bit less, where we saw silver shoot up and then again it was brought down. Now, during the last recession, we saw this. We saw in 2008, 2009, gold and silver, they both shot up. I mean, gold, went up to $1,900. Silver went up to like $50 an ounce. and then they were brought back down, most likely by manipulation, but that's a whole nother story. If we, first of all, do you think we're going to enter a recession? I mean, the mainstream media is out there and they're talking about recession first. Do you think we're going to enter a recession?
Well, we have to. It's I remember when Janet Yellen came out and said a couple of years ago that, we're not going to have another financial crisis for, I forget the timeline she put on it, but it was quite a long timeline. And I don't know how anyone could actually ever say that. Governments want to try to control the business cycle, and they do their best to control it. Look at the volatility in the major markets right now. If you don't think that's government driven, then I think you got rocks in your head. The governments are definitely trying to manipulate the business cycle in order to keep taxes coming in, and in order to keep the engine of the economy moving, and real estate prices buoyed up, retail sales buoyed up, because that's what drives the economy, and that's what ultimately drives taxes, because they have a huge tax requirement to just finance the government. So the government is actually in a conflict of interest when it comes to this kind of thing, because it's them that needs all this revenue, and they're going to do whatever they can just to keep this revenue coming in the door. So, of course, they're going to say, well, we're going to beat the business cycle and there's never going to be a recession again. Well, personally, I don't believe it. I think we are going into another recession. How deep it is another question. And, that's really where the debate is. I don't think you could ever prevent a recession, but maybe, somehow, modifying the depth of the recession, I guess potentially is possible.
So if we do enter this recession, do you think gold and silver are going to have a run up once again?
Well, look, you don't need a depression to have gold and silver go up. You're talking about money flows, and money flows in a recession are two different things. Recession is a normal business cycle. Recessions come and go. And you can go over 100-year chart and see, every, 5 to 10 years a recession comes, and they last for, a year or two at the most. And then they, a new, bull market starts, or a new, economic, boom starts, or whatever. And then, but that's totally irrelevant to gold and silver. Gold and silver is really, a sentiment driven trade. And I think, unfortunately, today, and it wasn't like that back in the 70s or 80s. People back then, when I was much younger, just starting in this business, people had gold and silver in their portfolios as just a normal part of their portfolio. You wouldn't find a fund manager out there that didn't have at least a couple of percentage, and maybe even higher allocation to either the miners or physical metal. Back then, there was no ETFs to choose from. It was just, you had a choice. You had to go buy a mining stock, or you go buy metals. And everyone had an allocation to that sector, and it was just normal business. Today, the institutions driven on algorithms, driven on ETFs, because 80% of the volume, I've actually heard higher numbers than that, but approximately 80% of the volume traded in the world is all computer driven. And these algos go after these markets that are moving. And so all these algos are chasing yield, whether it's yield on the downside or whether it's yield on the upside. And all these algos are doing exactly the same thing. And the trade over the last couple of years has been to get long the US dollar, get the long US equity markets, and short the commodities, short emerging markets. And it's been an enormous trade for them. There's recessions going on all over the world. So I don't really think it's really this recession issue that's really the driver of all of this. When the institutions wake up, the algorithms don't work anymore, and they're starting to break. You're seeing Apple down 40%. You're seeing all these, the FANGs down. You're seeing the Nasdaq. You're seeing all these markets now being driven lower. You go back and look at 2000, 2001 and compare, what happened then compared to what happened now. It's almost exactly the same phenomenon that's reoccurring. And where's that money going to go? That money doesn't care about whether there's a recession going on. That money needs to have a yield. So if that money is going to go to areas within the economy, areas within the industry or the market, the publicly traded markets, where there's undervalued sectors. And what are the undervalued sectors? It's emerging markets, and it's the metals, it's the miners. And that's where the flow is going to start to go. It's already started to go there. We've already seen it in the last, short period of time. And you're going to see emerging markets around the world start picking up. You're going to see the metals and the miners start picking up, and the money will start to go away from the sectors that have worked over the last couple of years. And that's just the way these markets work. And it's been working like this for the last 20 years. And it's not going to be any different in the cycle coming up.
Keith, let me ask you, I mean, you don't have to answer it, but do you own any small cap silver stocks, maybe like another First Majestic, something that's under the radar that no one really knows about?
Well, look, I've got my two core positions. Of course, my largest position is First Majestic Silver. And my second largest position would be First Mining Gold. You called it First Mining Finance earlier, but the company went through a name change and a small management change about a year ago, and we renamed the company, focusing on development, First Mining Gold. And of course, I've got a portfolio of other assets, Silver One Resources, which has got projects in Nevada, Zinc One, it's got projects in Peru, Nano One, which is a battery technology company based out of Vancouver. These are companies that, I've got large positions in, and, Silver One's pretty interesting to me because, I love silver, and First Majestic, has never been valued on its exploration potential. It gets valued on its production and its profitability, as it should. But, it's nice to have a smaller silver company in my portfolio that, has some substantial exploration upside, and, in a good jurisdiction like Nevada. There's not too many places like around the world that are as good as Nevada. And, the Candelaria project is an old silver mine, and I've been down there myself, and it's a pretty exciting project. Greg Crow's a great leader, great CEO, and he's very focused on progressing that project. And I'm there to help him if necessary. I'm not involved in management of any nature. I'm just simply a shareholder, but as a significant shareholder, of course, I'm available to assist whenever necessary.
Now, you mentioned Nevada, and we're talking about gold and silver. Just the other day, I was reading a report, and it was on Portfolio Wealth Global. I think it's portfoliowealthglobal.com. And it went over Nevada projects, the case for silver, the historical gold-silver ratio, how it ties into the U.S. dollar bear market, and that's just starting right now. And it was very interesting. I mean, I'll put that link at the bottom of this video so people can go over. It's completely free. You can read it and stuff. What I wanted to ask you was that right now we have so much debt in this country and around the world. I mean, the debt is around, $21 trillion right now, and the daily interest payments are around $1.5 billion. Now, we know Trump, he's the master of bankruptcies. He's the master of reorganization. Do you think it's possible for Trump to manage around this debt and maybe get rid of the debt or reorganize it in some way?
Well, you say, you kind of flip from the world to the U.S. That 21 trillion is U.S. only. It's not the world. And
right, that's correct.
And that, of course, assumes that the other 20 million that apparently has been lost somewhere, unaccounted for, that has now been redacted from, all the U.S. government websites as some kind of national security issue. So that 21 trillion could actually be north of 40 trillion, which is quite interesting. I'm sure many of your listeners have been listening about that. But, I don't think there's an out. These governments cannot get out of the debt. I'm a believer of what Jim Rickard says. I think that, he's probably got the only logical solution out there, whereby, one Monday morning we wake up and, all of a sudden gold is, $10,000 an ounce, and, all the governments, can pay off all their debt, with a new, valuation of gold, and the whole system gets reset, and, and away we go with, whether it's a new currency or whether it's, as he puts it, SDRs or whatever it may be. I hope he's not right on the SDR front, but because I'm not really looking forward to a world currency. I think government should have, sovereignty over their own printed currency, but that's a different, topic altogether. But yeah, I think that's the direction we have to go. There's just simply too much debt out there. and something's going to have to change for it to all come to an end. And whether Trump's can do it or the Trump government can do it, I'm just not sure. But I think it needs another crisis. There is currently no major crisis appearing, to arrive anytime soon, at least, as far as, all the pundits think anyways. Not that no one predicted, the 2008, crash, but, if something like that repeated itself, then yeah, I think the governments would be forced to get together because, with interest rates so low, there's really little room for them to make any kinds of major changes. I think that they have to get together at that point and come up with a new solution.
What about, we're going to go back to the beginning when we talked about Trump contradicting the Fed, because Representative Thomas Massie, he introduced a bill into the House to audit the Fed. Now, if the Fed was actually audited, Trump has been calling out the Fed, this would open up their books and people would see what was really going on. And you might even see, criminal acts within the Fed. Do you think this would be a case then to maybe get rid of the debt if they approach it in that way?
Yeah, it's really hard to speculate, what's going to happen. It's just, as I said earlier, there is no market in the world that is not manipulated. And this is something that I've only realized in the last decade. I think 20 years ago or more, when I first got into this industry, I thought that all the markets were real and there was real pricing mechanisms in place. And you look at a price of something and you feel that it's being properly priced, and that's what you accept. The markets are perfect, and that's what I grew up to think. But over time, I've learned that markets are extremely imperfect, and there's a lot of vested interests in where these markets are, and governments unfortunately manipulate these markets. And I heard earlier today, in I think it was a Peter Schiff interview, talking about, the Swiss government or the Swiss central bank owning, large percentages of Apple, stock and how much they must be impacted by the fact that they are one of the largest shareholders of Apple. Well, the Swiss government actually publishes on a monthly basis what stocks they own on a worldwide basis, but the U.S. government doesn't. The British government doesn't, the Japanese government doesn't, but we know all these governments are in the market supporting their stocks in their, current, or in their marketplaces. I read one stat that, the Japanese government owned 80% of the market in Japan. I'm not sure if that's a real number or not, but I recall that number being mentioned in a piece a couple of months ago. And if that is in fact true, that you have a government that is that much involved in the equity markets, that much involved in the gold and silver markets or the oil markets or any market around the world, if the governments are in there manipulating on our behalf with our tax dollars, thinking they're doing the best things for the citizens of their country, then these guys need to be outvoted. And we need to reset. We need to bring new people into these governments with new thought processes and rewrite the way things happen, around the world, not just in the United States, but, everywhere. Because, the way these governments are acting is completely contrary to the authority, I believe anyways, that the authority that the electorate has given them.
I completely agree. Keith, thank you very much for being on the X22 Report Spotlight. Once again, how can people get to your website and see what you do?
Yeah, for sure. Well, of course, First Majestic Silver, a very well-known company, just firstmajestic.com, New York listed AG. First Mining Gold, I forget the U.S. symbol, FMGMS or something like that. I don't watch that particular market that closely, but the Canadian symbol is FF on the Toronto Stock Exchange, website, firstmininggold.com. And of course, I'm on Twitter, Keith_Neumeyer. Feel free to look me up at any time. But, I would like to just let people know, go on these websites, don't just take, my comments or my advice when it comes to investing in mining stocks or gold and silver. The mining shares are, can be extremely volatile and sometimes, they cannot always be meant for the meek investors. So just be cautious and do your due diligence. look at the PowerPoints. First Majestic has a great PowerPoint. First Mining's got a great PowerPoint. If you want to go to Silver One's website, they've got a great up-to-date PowerPoint as well. So just do your own due diligence and, call these companies and get information from them because they'll be happy to talk to anyone.
Fantastic. Keith, once again, thank you very much for taking the time out and coming on the X22 Report Spotlight. I really appreciate it. Thank you.
It's always a pleasure, Dave. Thank you.
Thank you.